a historic turning point for Iraq's currency. What the anticipated dinar revaluation means introduction. Iraq is standing on the edge of what may become one of the most transformative financial announcements in its modern history. After years of speculation, conflicting rumors, and cautious reforms, the Central Bank of Iraq, CBI, appears ready to reveal a major change to the official exchange rate of the Iraqi dinar. According to credible reports, the official statement is expected on Tuesday evening at 8 p.m. Baghdad time. Such a move is more than a technical adjustment. It is a symbol of sovereignty, an economic test, and a declaration of Iraq's readiness to reshape its position in the global financial system. For ordinary Iraqis, it could alter the cost of daily essentials. For international investors, it may unlock new opportunities. For the nation as a whole, it could mark the start of a new financial era. This article explores the background, timing, possible scenarios, risks, and opportunities surrounding the CBI's anticipated decision, weaving together history, expert commentary, and the real-world implications of a currency revaluation. Why the Iraqi dinar matters. The Iraqi dinar, IQD, is not just paper money. It is the reflection of Iraq's turbulent journey through wars, sanctions, political unrest, and economic rebuilding. Since 2003, the currency has experienced significant volatility, with the CBI often intervening to stabilize its value. Currently, the official exchange rate sits near 1310 IQD per US dollar, a level set to control inflation and prevent further destabilization. However, the parallel market, often called the black market, has consistently shown higher rates, reflecting lack of confidence, arbitrage opportunities, and weak enforcement of monetary policy. This gap has been a source of corruption, speculation, and mistrust in the financial system. By realigning the exchange rate, Iraq seeks to narrow this gap, restore credibility, and create a more transparent environment for both domestic and foreign investors. Why now? The convergence of pressures. Analysts point to three main factors that make this moment unique. 1. Economic reform momentum. Iraq has made progress in tightening oversight of currency auctions, digitizing banking services, and enforcing stricter anti-money laundering measures. These steps strengthen the CBI's ability to support a more stable exchange rate. 2. Strong oil revenues. Oil remains Iraq's economic backbone, accounting for more than 90% of government revenue. With global oil prices holding strong, Iraq's foreign currency reserves have grown, giving the central bank the cushion it needs to defend a stronger dinar. 3. International pressure. Global institutions, such as the International Monetary Fund, IMF, and the World Bank have urged Iraq to stabilize its currency as a prerequisite for economic growth and deeper integration with world markets. Trading partners are also pushing for reforms to simplify transactions and reduce financial opacity. Together, these forces have created a rare window for decisive action. The timing of the announcement. Why Tuesday at 8 p.m.? The timing is deliberate. Domestically, Tuesday marks the real start of the business week in Iraq. By making the announcement then, the CBI ensures that banks, businesses, and regulators are fully operational and able to respond within the same cycle. This reduces confusion and panic. Globally, Tuesday morning in Baghdad overlaps with European market hours and leads into the U.S. trading day. This ensures the decision is felt across London, Frankfurt, and New York almost in real time, a sign that Iraq wants the world to take notice. The message is clear. This move is not an isolated adjustment. It is part of a broader integration strategy. Possible scenarios for the new exchange rate. At present, speculation is focused on two main strategies under review by the CBI. 1. Gradual appreciation. The dinar could be allowed to strengthen slowly in small increments, giving markets and institutions time to adapt. This cautious approach reduces volatility, builds confidence, and avoids sudden shocks. 2. One-time revaluation. The CBI could reset the rate all at once, potentially moving toward 1,000 IQD per dollar or even stronger. This bold move would send a powerful signal of confidence, but risks triggering short-term market turbulence. Each approach carries trade-offs. Gradualism promotes stability but may be seen as timid. Sudden revaluation captures global attention but could spark chaos if not carefully managed. Voices of analysis. Experts weigh in. Frank 26, a leading commentator on Iraqi reform, stresses that the real story isn't just about numbers. It's about restoring trust between citizens and their money. He argues that belief in the dinar's long-term stability is more valuable than any short-term adjustment. Mark Z focuses on the international angle. He emphasizes that the world has long viewed Iraq as unstable. By executing reforms with transparency, Iraq could change its global reputation and attract credit, trade, and investment. Pimpy, known for his cautious outlook, warns that big risks accompany bold moves. Mismanagement, corruption, or overconfidence could backfire, undermining rather than strengthening trust. For him, the challenge is not the announcement itself, but disciplined follow-through. Historical context. Lessons from the past. Iraq is not the first country to face such a pivotal moment. Other nations have revalued or adjusted their currencies under international scrutiny. Kuwait, 1991. After the Gulf War, Kuwait restored the Kuwaiti dinar's pre-invasion value, reinforcing confidence in its financial stability. Egypt, 2016, floated its pound, causing a sharp devaluation but eventually attracting foreign investment and stabilizing inflation. Vietnam gradually adjusted its dong to control inflation while opening its economy to international trade. Iraq's challenge is to learn from these examples while tailoring its approach to unique domestic and regional realities. What it means for ordinary Iraqis. For the Iraqi people, this decision is not abstract policy. It will directly affect purchasing power. A stronger dinar lowers the cost of imported goods such as food, fuel, and medicine. Inflation. Years of high prices have eroded household incomes. Revaluation could ease pressure on families. Trust in banks. Many citizens hoard cash or use informal exchange markets. A credible currency policy could encourage deposits, strengthening the formal financial sector. Middle-class growth. Stability in the currency could help rebuild Iraq's middle class, a vital driver of sustainable growth. What it means for investors. For investors, both inside and outside Iraq, the announcement could open doors. Currency holders, those who have speculated on the dinar, could see paper gains. Foreign businesses, a stable exchange rate improves the investment climate, making it easier to plan, price, and transact. Financial markets, transparency and credibility could pave the way for Iraq to access new credit lines, bonds, and capital inflows. But caution remains essential. The immediate aftermath is likely to be volatile, with rates spiking, dipping, and then settling. Acting too quickly could be costly. Risks and challenges. Despite optimism, serious risks remain. 1. Market volatility. Forex markets are unpredictable. Rapid changes could invite speculation and destabilization. 2. Political instability. Iraq's internal divisions could disrupt reforms. 3. Export competitiveness. A stronger dinar makes Iraqi goods more expensive abroad unless productivity improves. 4. Dependence on oil. Fluctuations in oil prices remain a major vulnerability. 5. Corruption. Without transparency and enforcement, reforms could be undermined. International dimension. The revaluation will not only affect Iraq domestically, but also shape perceptions globally. Trading partners. Countries in the Middle East and Europe rely on Iraqi oil and goods. A stable dinar facilitates trade. IMF and World Bank will monitor implementation closely as a test of Iraq's credibility. Global markets. Investors in London, Frankfurt, and New York will watch closely to see whether Iraq emerges as a more reliable partner. The path ahead. Execution is key. Announcing the new rate is only the first step. What comes afterward will determine success or failure. The CBI must maintain clear, transparent communication. Ensure consistent enforcement of reforms. Guard against speculation and corruption. Build public trust through steady policies. Execution, not just intention, will define Iraq's financial future. Conclusion. As Iraq prepares for the CBI's announcement on Tuesday evening, the stakes could not be higher. This decision represents more than a change in numbers. It is a reflection of sovereignty, discipline, and the desire to reconnect with the global economy. If managed well, a stronger dinar could ease inflation, restore confidence, attract investment, and signal that Iraq is ready to move beyond decades of turmoil. If mishandled, it could trigger volatility, mistrust, and setbacks. The world is watching. For Iraq, this is more than a currency adjustment. It is a defining test of its economic maturity and political resolve. At Iraqi Dinar today, we will continue to monitor developments in real time, separating fact from rumor and providing clear analysis. Whatever happens on Tuesday, the days and weeks that follow will shape Iraq's financial story for years to come. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.